welcome and good morning, everyone. In planning and scanning, several things. The first noticeable change in the markets last Thursday, when we were seeing, we sent out a few important tweets. So if you are a student and you're not signed up for the tweets, I definitely try to put out some decent information in a timely manner. It's more of a permission-based tweeting. We don't tweet to the whole world, so I'm not giving out family secrets and member secrets to the whole world. But I think it's a better way to communicate because not everyone has emails set up at the time, or there's just it's impossible to communicate in different venues, and we just found that Twitter was pretty decent. So starting with last week, late in the afternoon on Wednesday. You should have gotten a tweet saying if you're into any covered calls, this was a great time as the market, with the theta decay, with the price decline, was just a great time to get the heck out of Dodge, and so that was nice. And then on Thursday, was in the room a little bit and kind of made some commentaries. We first were looking for that when the market broke below 20, looking at a daily chart. You'll notice that S&Ps generally typically don't form double and triple bottoms. They break. They make spike lows. So one of the things that I was posting before I had a little bit of an internet issue was that the advanced, looking at the other cash indices, we saw that the NYSE, the New York Stock Exchange Composite Index, it had broken out to new daily lows. I was trying to type that in, and you guys went short, so it was just a good time last week. Moreover, then when we got into on Thursday, as the market just cratered and fell under 1,600, it was interesting that the PPS buy signals on the cash markets, all of them at the same time, generated 60-minute buy signals. And I'm going to tell you something, that is not, as we now know, was not just a local inspired computer glitch. It was broad-based buying. So we like to respect, and one of the things that we teach one thing that we also want to watch for is false breakouts. In other words, this is not, let's say it's not a head and shoulders pattern. Even though the volume also looks very good to match that inverted head and shoulders bottom formation, we want to look for potential false breakdowns, which now that would not be a head and shoulders bottom. That would just be possibly a continuation to the downside. So I do have my eyes still on Apple, and notice that we did not negate a weekly buy signal. Even with last week, we did not close below the prior week's low. So this week, this week we have the 457 down to the 438. That range. You got to watch for a weekly close above or below that weekly doji to give us a little bit of insights into the marketplace, and we'll be watching daily charts on Apple as well. I hope that helped you out, gave you a little bit of insights, see where the market movement is going, and I still think that overall that we're going to be kind of forming a consolidation period for this week rather than looking for a week of new blow-off highs. Thank you all for attending.